All right. Hey, everyone. My name is Andy, and thanks for joining this Zoom session on our new golden signals here for trading Oracle. So I'd like to just kind of go over uh, what these signals are and how I use them, how I use the EMAs and the time frame. So I know we just got these, and everyone's pretty sure. I'm pretty sure one is just kind of playing around with them and changing the settings and sensitivities on these things, which is great, and I urge everybody to do that. We all have different styles of trading, and some people like to trade the lower time frames, some people like to trade the higher time frames. So, and with that said and done, um, let's kind of begin here. So obviously you'll see a couple of different signals. You'll see one's called golden. One that's SS golden, and the SS stands for slingshot. And like right here, you'll see just the SS, which is just the slingshot. Okay. So SS golden and slingshot, these are kind of like the same. So I guess the SS golden is more of like a hybrid. So the idea for the golden signals is when the EMAs switch from a long position, let's just say to a short position, then the golden signals will come up. And this way, you'll be allowed to trade with trend. It kind of keeps you on the right side of the track. So for this to happen, you have the VWAP, which is the black line on my chart. And then you have the EMAs in this sequence going for short. It's red, orange, and teal. Okay. So it's the 34 EMA, 55, and the 88. And one of the reasons I chose those EMAs is I wanted them to look more like a ribbon, and it just kind of fit the needs that I, I just like how it looked like on the chart. I think it looked pretty cool. I was kind of switching around with different EMAs, but I really like how these turned out. So been pretty happy with it. On my chart here, I also use a cloud, which is this red, this green, and it turns red at times. Um, it's a 200 EMA cloud. So if you guys want to put that on too, that's fine. I'm a visual person, so for me, I like to have these on here, and it just kind of lets me know how price is moving, and depending on the pullbacks, what's really happening, and also as the EMAs start to tighten up over here, it just kind of alerts me that price could be changing direction. Okay. So with the slingshot, the way I got that name, it's pretty interesting here. But it just the EMAs, as the EMAs pull back, okay, it just kind of reminds me of like a slingshot, as you were a kid, you had the slingshot, some of you pull the band, the rubber band back, and you put like something at the end. And when you release it, obviously it, slings away. So the signal is the actual trigger. So when you get the slingshot and you have this like nice dip in here, then it triggers the price, and price, it just moves along. So that's how I got the name slingshot for it. It's nothing really special, but it's more of a visual that when I see like the dip, especially the teal and the orange uh, EMAs as they come close together, and obviously they're going to be above the VWAP too. It'll trigger the signal and, price will go up. So here, I know here, we'll see some other slingshots here. So here, I guess the teal and the orange came really close together and it triggered it. Under the settings, there's something for slingshot, and I think it's set at 0.2. You guys can mess around with that, and it just depends on how far or close you want these EMAs to be. It'll trigger the slingshot, but I think 0.2 is a pretty good setting to where it's at. So the really cool thing about these signals is that if you do go into the style here, for instance, you can turn off, like the buy and the sell. So all these other little signals, like the ones that you were used to, are just hidden right now. And all you have left are your basic signals then, like the golden and slingshots like that. So just depends on how you like to trade. If you like to trade with trend, this can be very helpful. Sometimes if you see another signal, sometimes people might freak out a little bit. But if you keep, these things turned off and then you see like a, slingshot signal, then you can easily take it. See a golden signal, then you can take that. Okay. And, I really urge everybody to mess around with these things because, I mean, for all you know, what if somebody just wants the golden signals? You can, hide the sell slingshot, buy slingshot, and buy and sell, and just keep the golden signals. So depending on your sensitivity settings and time frame, those can just appear on the chart for you, which could be really cool. So but that's gonna take a little bit of work to see what suits you as an individual trader. So for me, I like to have things on only because I trade divergences. So these additional signals up here really help me with that. Okay. As the regular golden signals help me for that as well. So let me explain the EMAs real fast. So I like to use the analogy of a river when I talk about these EMAs. Okay. Um, so for instance, on a short, you have the red, orange, and teal. So, and that's a really nice sequence with the VWAP above. And so it's like the river now is flowing downwards. Okay. So you're going to trade with the current of the river. You're going to trade with the trend. Okay. And especially for new traders, this is very important with your trading journey before you start taking some of these reversals. So it's really good to go in and possibly trade as a one-to-one risk to reward, or however your trading plan sees fit, but highly recommend you trade with the trend, and this will keep you accountable. And it's a nice visual to look at, you know, just as like right here, you have at the bottom, you have the red, orange, and teal, and you got VWAP down below, and I have my cloud right here. So for me, when I see that, I'll just zoom in a little bit here. For me, the river is flowing upwards. We're going upstream now, okay? And once I start to get some of these signals, obviously there's a bit of consolidation right here, but, only because I do see this nice sequence with the VWAP, I'm ready to make a trade going to the upside. Now, right here where there is consolidation, I'm sure there's, various ways, as traders You can always do a bunch of straight lines, and see where the breakout will happen, and that's how I urge you guys to do this too, because, trading is never a guarantee, so anything can happen, but this, seeing this color sequence and just how everything's positioned gives me a little bit more confidence to get into a long trade once I see like a nice little breakout like this. So keep that in mind. Just because we have signals here doesn't mean you can take all the signals. You do need to have a understanding of price action on top of market structure. So people in the past have asked me, what is market structure? And market structure is basically your supply and demand or support and resistance. Okay, so you should always have your chart marked, because it can affect price in the future. So always look to the left of your screen. So you see right here, we have a nice, you see my orange rectangle, we have a nice support area, but look what happens if I stretch this out all the way, it can affect price in the future. So whether this is drawn correctly, maybe it could be down here a little bit or a little bit up, it's a visual marker, so as price is coming near that visual marker, you have an idea that you're coming into a support level and maybe it's a good idea to start taking your profit or, removing some contracts and having a runner, maybe just go down to the end and seeing what happens. In this case, we had a nice wick. This was like a liquidity sweep, at least to the left right here. See, the wick just went past this wick and then just shot right back up. And here we had a nice slingshot signal that went up. Okay. So this is how I like to use some of these, and we'll see more examples here, the signals, and how to do consolidations. So you can see on my screen here, I have two shaded colors. Okay. I have a light purple and I have a dark purple. Okay. And basically I got this. I went into sessions where you can, just really mark up the London session, New York, Tokyo, and so forth. But I use different time frames here, and I'll explain that what I did. And this helps me trade these golden signals. So for me, I like to trade the morning session. Okay. I really like uh, NQ, which is futures contract for NASDAQ. So the black line is the New York Open, and where I'm at, it opens up at 8:30 in the morning, shuts down at 3 p.m. Central Standard Time. So one of the reasons I do like to trade the open and I like to trade within the darker shaded color, which is from 8 o'clock to about 9:30. Okay. The light color here is 7 a.m. to 11 a.m. These are all Central Standard Times. Okay. Is that in the darker area, and on my observations, and this is just my observation here, um, and on NQ, whatever ticker you like to trade, you should always back test it. I know a lot of you guys like to trade SPY. So SPY pretty much resembles NASDAQ. There's great correlation between the two. So there's a lot of volume that comes in, especially at the open, and price is going to run. So it's a good way, once you gain that experience, it's a good way to take some of these really nice trades around this time frame. And not only that, but the golden signals that come through around this time frame, um, I kind of hold it more to like the regular signals that are through here. And I feel that psychologically, when I do see like the golden, or slingshot or slingshot golden, that I have a high probability that this trade is going to run. It's going to take a little bit better than like a regular buy or sell signal. So that's my theory behind that. And I feel between 7 o'clock and 11, you can also find some pretty good trades around here. Now, I know for NASDAQ, a lot of times price likes to just taper off and just, you know, just kind of go flat. And it might pick up a little bit in the afternoon session starting around 1, but I really don't trade that. But you can see here on this day, which is FOMC, we had, some really good movement on NASDAQ, and I'm sure a lot of the other indices as well too. So I want to show you some other examples, regarding this little theory between the shaded colors and the signals here. So we'll move on to the day before. Now, this is the Asian session, and for some reason, NASDAQ and a lot of these indices don't do so well in the Asian session, but that doesn't mean that, there's others. I mean, there's others, you like Forex, or if you're trading futures, there's even currency futures that trade really well within the Asian session. So that's just something you'll have to pick up and um, back test. So here we are on December the 12th, which was yesterday. So you can see the two shaded areas. And right away, right here, I can see what's going on with my EMAs. So all of a sudden, right here, before the open, so that's the good thing about trading futures. You can trade futures 23 hours a day. It just shuts down for 1 hour between 4 and 5 p.m. Central Standard Time, just for like some maintenance things. So with brokers. So right here, I do see a really nice divergence setup. Okay. And this is how I like to trade. And I know many of you are doing it. And I'm really proud of a lot of you. A lot of you are doing really good with this. So when I do see a divergence and then I see the signal, this is what really helps me. Um, I will, take on that trade. You get some pretty good volatility in here as you even get closer to the New York session. This is part of the London session right in here. So I set alerts to all these signals in here. So I urge you guys to set up some of these alerts too. You can see right here, um, I have the sell signal and buy signal for the 2-minute chart. And this way, when the signal does appear, it will alert me. And then I see if there's a divergence. And, at that point, I will plan to take on the trade, if it's feasible, you know. Plus, I also like to have my chart marked before I trade. So, meaning I would look way to the left to see if if there was some sort of price way down on the left, and this is what made price stop right here. Kind of thinking there is, because we had some 3 nice rejection wicks right here too, and price just dove. Okay. So what's going on right here now? Okay. One, we're at a nice level, a nice zone. So when you do trade divergences, if you do like to trade divergences, these reversal divergences like to like to reverse basically at key levels of support and resistance, okay? And that's what's happening here. So as price is coming down here, all of a sudden my EMAs, you can see them just kind of, making a U-turn right here. And you can see how they're getting really tight right here. So a couple things could be happening right here, okay? One, this can turn into a slingshot, you know, which it can curve up, and then swing price up, or it can totally do a nice reversal as the bands are showing here, where you have that nice sequence of VWAP, red, orange, and teal, which triggers the golden signal right here. And then you can take on that trade. So once again, price stopped right here because way to the left somewhere, and I have some other charts marked where I can show you somewhere way to the left, as you can see right through here, like these areas of points of interest that stand out, there's a good resistance level here. There's some support areas here. So that's what triggered price to stop here and reverse. Okay. So with this said and done, let's just say I did take two trades. I took this trade here and I took this trade here. So now as a trader, you really need to decide what kind of a trader you want to be. In my opinion, once again, you want to be a good disciplined trader and stick with some good A plus setups, or do you want to just kind of be one of these traders that's going to just take every signal that they see on the chart? Okay. So for me, it's an easy call. I like to take A plus setups. Okay. So I see a divergence trade. It's within some of my shaded parameters that I like. Okay, I take the first one. I see this. It's a nice pullback. Sometimes the pullback will go into the EMAs, and I see another golden signal, and you can take it down to the next zone, the next level. All right, so you have two really nice A plus setup trades. So if you're a beginner trader, I would just take like one trade per day. Okay, find an A plus setup. Take that trade, okay, and build your account. Don't be greedy, okay, because greed is what's going to empty your account, okay? So this is why I have these shaded areas right here, because of the volatility, because the golden signals I feel work really well around these time frames. I'm not saying they're not going to work well past those time frames. They work well for me because I like to trade this morning session. If you're an afternoon trader, then, based on the sensitivity and the time frame you have on your chart, you're probably going to get some phenomenal signals over here. So I like to use the 2-minute chart, and my sensitivity is at 85. I'll show you right here. Here it is. It's 85 and we're on a 2-minute chart. So, and for me, I like using the 85 because I can get pretty good entries that way. So it is going to give me a little bit more noise, on the chart, but this is what I'm used to. So play around, some of the other numbers I've used is also 125, 176, 225, 295, 325, and even 395. Don't be afraid to test these higher numbers into the hundreds. You'll be surprised on how your chart will look. So go ahead and do that, please. So I was just getting over a cold, so that's why I'm kind of coughing a little bit. So Yeah, so this is why I like to stay here. Now, this right here is also another divergence. Okay, if I wanted to take this trade, it's well within that parameter. It's within my zone. Price came down to the level. You have a high probability setup over here, and here it is. This is a bullish divergence right here. Actually, I call this like a H pattern bullish divergence because it makes like the letter H, so that's actually my favorite trade setup right here is the H pattern bullish divergence. So even if I didn't want to take this trade and I wanted to take something within the darker shaded area, that's fine. I could have done this trade and I could have done this trade right here. So in futures, trading NQ on one contract, let's say I went from here to like about right here. Okay, it's 36 points. It's $20 a point. So for this one, we're talking, this is a $720 trade on one contract. So if I wanted to take this up a little bit higher, have this trade run, or just, whatever your trading parameters are, 1-to-1 risk to reward or 1-to-1.5, by all means, follow your trading plan. If I went up to here, 42 points, this is over an $800 trade. So you've got two good trades with really good money. So this is why I'm saying don't be greedy when you trade, because when you do, then you can get in trouble and you can lose your account. So this is why I said, this, shaded areas, it keeps me accountable for my trade. So it might help you too. Maybe you guys like to trade a different, time frame where you might want to use something similar to this. So I know that this helps me out. Okay. So let's move on to some other samples here. And I also like how NQ just really trends. It's really nice. I really like it. So here's a really nice example here. The EMAs before, I always like to see what's happening before the New York Open. Okay, I'm seeing them, they're fanned out, really nice. As you can see, you have the cloud, you've got VWAP, and then you've got red, orange, and teal. So this thing is like going up. You've got golden signals here, slingshot, really nice. So you could even take a nice, trade here if you wanted. Okay. I like to look for a divergence in my trade, which I do see right here. Okay. So from here to here, and I go from the candle, the body of the candle to the body of the candle. I don't go from wick to wick. So this divergence is called a hidden bullish divergence because it's doing the opposite. This is making higher highs, and my oscillator here is making lower lows. And here I have double confirmation. So the oscillators on the bottom, this is the ultimate oscillator, but Trading Oracle has one too. And you can click off on some of the other settings and just keep the ultimate oscillator. And I keep those numbers as is, 7, 14, 28. Okay. Oops. And the one below is the TSI, and this is the one that I like to use. Thought I would have like the name right here. Okay, some reason it's not showing up. This one is the true strength indicator by Imbus, and the settings for it is 6, 13, and 4. Okay. I can dive deeper into these things here, how you can, use the crossovers as well. But right now we're just concentrating on the golden signals. So another day I can get into this, but these are the two indicators that I use for divergence trading. You know, they help each other out. I only need to see the pattern either on one or the other. If it shows it on both, I have double confirmation, which is even better. So this is why I use these, and they do help each other. So what's happening here on the chart now, as we're getting closer, I'm getting that nice golden signal. And look what's happening here. You have that sequence. You got the river going upstream right here. It's a beautiful thing, you know, and you know, it's red, orange, and teal plus VWAP. And check this out. Price just like took off right here. Okay. So what usually happens, what I've been observing is that price would like to do a nice pullback, come into the band or close to it. Sometimes it'll get into the orange, which is fine. And then you'll get a golden signal, which you can trade up. So if you do like these two trades, then you've done really well for yourself. If you've done just one trade within this darker area, then you've done great because, you know, this right here is 57 points. This is over $1,000 on one contract. If you use two contracts, it's $2,000 plus. Okay, so you have an idea of how this works. Now, as a trader, and I told you I like to take divergences, I always like to look for the patterns. The patterns are really strong, especially around the New York Open. They like to work, um, they just show up. So you just wait for the pattern right here. This is a nice bearish divergence, and you can see this doing the opposite. So here, it's not doing it, okay? Right here, you can see it's going the same way. It's making a higher high. This is making a higher high. So this one is a void, but on the TSI, it's making a lower low right here. So it does the opposite, okay? And this way, when I see the signal here, and when my alert, you know, prompts my phone, then I'll come in and I'll take a reversal trade. Now remember, these reversals, you're going against the trend. So these are short-term trades, okay? So sometimes I just like to move into maybe like the red or the orange EMA, you know? So sometimes this thing can go down to VWAP, but remember, the river is flowing upstream. Okay, the current is going this way. So just be careful with these reversals. All right. So what do we have here? This is a really nice pullback. You got a nice slingshot trade right here too. And, you know, even though this golden signal right here is pointing up right here, this is because of the sensitivity, you know, sometimes what I'll do is I have, you know, I'll do like a split screen, and I'll have like maybe even like a 3 minute or 4 minute chart. And then instead of having two signals here, it'll just show one. So, and that's what I like to do. So from here, you know, this is a nice slingshot. You can kind of see the bands getting close together. And then, you know, the slingshot signal came, which was the trigger, and price took off. So how long, someone's asking here, how long can we hold your trade? Well, that all depends on your risk to reward. I like to use market structure. So like right here, this orange line. So if I'm taking a trade, and if price, you know, let's say I get in somewhere abouts right here, you know, and if price, you know, even if it comes close to it or right about there, then that's a good way to exit. Okay. Once again, don't be greedy. Okay. Um, you know, this is $1,000 trade right here. This is over 50 points is $1,000 on one futures contract for NASDAQ. So, obviously it went higher and, it kept going a little bit higher. Well, that was after hours, but it went a little bit higher. It's okay. You know, don't be disappointed as you trade and you see price going higher and then you're feeling all down because you think to yourself you should have stayed in the trade longer. Dude, don't do that because that's going to just put you in that mood every time you're going to think about a trade. The important thing about getting into a trade is your risk management and that you're taking an A plus setup. Okay. Only take an A plus setup. Don't trade because you're bored. Don't trade because you see others posting trades and you feel like you're obligated to take a trade to show off. That's how you can get in trouble. So, this for me would have been a beautiful trade because I see a nice H pattern bullish divergence right here. Okay. Plus, I have double confirmation down below. And it's within my trading parameters, my time frame right here. Okay. So here is that nice H pattern, forms a nice H right here. I love that, and price takes off. Folks, the market gives these patterns day in and day out. It's the same patterns you're going to see all the time. If you really pay attention to how price moves, go from one day to the other, you're going to see a lot of the same patterns, and then this is what keeps you above the rest. And that is what's going to give you your edge as you're trading. Okay. So look what's happening here. I have some nice golden signals, but look, now price is coming down a little bit. I'm not too concerned as of yet because I've got my cloud down below. I've got VWAP right here. I've got that nice sequence, red, orange, and teal. I'm going to see what's going to happen here. And lo and behold, here, price took off. Okay. And you can exit at market structure or however your trading plan works, or you got to manage your own risk to reward. All right. In the afternoon session, so this is one of the reasons I like the morning session. Sometimes when um, price trends, then it usually just goes into consolidation phase right here. So even though it's showing some golden signals going up, you know, um, depending on how narrow the range is, here it's going up a little bit steeper, so you could have made a little bit of money right here, but it just ranges usually after a long rally, like how we see right here. Okay. So once again, the Asian session can get kind of flat, um, but you can try other tickers and see how those operate. Okay. So let's see what's happening here on this day, which is December the 8th. Okay, this is really cool because I am looking at my EMAs. I want to see where VWAP is and where my cloud is. And VWAP and the cloud are above the EMAs. I got that nice sequence, red, orange, and teal. I'm seeing my golden signals. I'm going to take on this trade right here. And right here, this is news at 7:30. So, I don't know how people like to, if they like to trade the news. If not, then, um, you don't have to trade. You can just wait until, the open. So even though, I have that sequence, I always like to have additional confirmation too. See, I don't like to trade the news because sometimes things can happen, but if I see a divergence, then I will take it. And right here, this is equal highs right here, and which is part of a divergence pattern. And that's a nice pattern to take right there. So even though here I have a signal to go long, we can go, you're going against the trend. Okay. You don't know how many candles going up you're going to, prices, price action is going to give you. This one, it's only giving you one. This one's giving you a few. When you're trading with the trend, when you're trading with the current, then you have more of these bars to your advantage because you're moving along with the trend, okay? So now you're reaching the New York Open over here. I am going to say if there's a divergence here, which there is. I tell you, man, these things are strong during these times. We have one right here that is equal lows once again, and that is also a pattern. And here you don't have a golden signal. I guess it needs to have the VWAP and everything underneath. So, but it is still a buy signal, and I'm going to take this only because it is a nice divergence and it's a high probability trade for me, and it's going to go. Okay. If you don't want to take it, that's fine. But look what's happening after the fact. Okay. Price shoots up. It's going to make that pullback in here. And let me just zoom in. And right now, my EMAs, they are moving in tight. Okay. So what's happening here, it's right at that transition phase. It's transitioning from short to long. Okay. And this is what prompted that golden signal. That's still pretty good. I see a slingshot right here. I wouldn't take on this trade. Okay. This golden signal is a little bit better for me only because we're in that transition phase going up this way. Okay. And I can also look at my oscillators and I can easily see that the momentum from this area right here and this area right here shifted upwards, going above the zero line. Okay. Anything above the zero line is bullish, and everything below the zero line is bearish. Okay. So, these are really good confluences as you trade. So when you put the equation all together, it just makes trading a little bit easier. And once you're really used to it, then you can do really well. So once again, a nice, beautiful trade. Okay. So if I'm doing a trade here, one trade, two trades. I had two A plus setups. I don't need to do anything else for the rest of the day. Okay. Regardless, if I see another trade right here, if I wanted to take it, I could. But once, I'm going to keep saying this, what kind of a trader are you? Are you going to be a good disciplined trader? Or are you going to be one of these traders that just wants to take every trade? Okay. That's up to you. Okay. I like to be a disciplined trader. Okay. Because if you're taking an A plus setup and you know that these trades are high probability trades that work, then it's all about adding contracts or lot sizes or shares to that particular trade. You can do one trade right here and I can have like 5 contracts. Okay. My if my equity allows me to put that in, that means if I take 5 contracts, I need to have at least $5,000 in my account. Okay. So you can just stick with one trade, one A plus trade, and just add on shares, contracts, and so forth. So this is why I like to see these golden signals once again, because um, like I said before, psychologically, I just feel that they hold better for me than I would probably one of these green standard signals. So, and it's within that darker shaded area, which I really like, and just gives me a little bit more confidence. So let's move on to another. Okay, so this day was December the 7th, and man, this river has been flowing for hours. I mean, look at that. Look at that beautiful sequence. You got VWAP. I've got the cloud, red, orange, and teal. Golden signals all the way, right through and through. This is beautiful right in here. This is a trade to take right here. Okay, I don't see, well, there's little, um, yeah, there's divergence right in here too, that you could have taken this going up. And then as you get up into the open, you would just wait right there, because first off, we need to have areas marked off. So the one thing is, we don't really know if you're looking way to the left at some of these peaks. You don't know which one is really going to handle. Is price going to stop at that rectangle that I drew? Is price going to stop at this rectangle, and so forth? So look, because I would have these, drawn out like all the way, before you start trading, as you see here, price is moving up. Right now, we are at this resistance level, but you want to see what's going to happen right in here. I'm already into this trade, so I'm getting in down here, and I'm at the open, so I can easily just exit my trade, because there's high probability that this could turn coming down. Okay, so what happened here? It actually went up a little higher at this resistance level, and it did turn. So right here, all this is a bearish divergence, which you can see right here and right here. So if I get this signal, I'm going to take this signal, because remember, there's some pretty good volume rolling in at the New York Open, but it's going to be a short-term trade. Okay, so I'm going to get in, and in this case, price went down to the red EMA and to VWAP before it bounced. Okay, so basically, it's the same patterns that we've been seeing. You're going to get a good run. It's going to do a nice pullback, and then here you're going to see the nice golden signal, and you can take on this trade. And another confluence to that is that it is a hidden bullish divergence. It's a trend continuation divergence. So I've got the confluence of the divergence. I've got my confluence of my cloud, VWAP, red, orange, and teal. River's flowing up, and I got the signal. So all the stars are aligned, and I'm taking this trade. So I could, this is like one trade, this is two trades. It's making that decision again on what you want to do as a trader, so, but look what happens here in the afternoon. Okay, see, this is what I'm talking about. Sometimes, um, price just consolidates right in here. So, and then depending on how narrow the range is, between here and down here, you can do some like little scalping in here if you want to. So me, I'd rather trade something right in here, closer to the New York Open, than do a trade somewhere up in here in the afternoon. Okay, remember the trend isn't going to last forever. It's going to slow down. It's going to trigger some false signals as the trend moves along. So usually, like you see this nice golden signal right here, this would be a good one to take, and then possibly a second one. I wouldn't do anything other than that, so at least like the first couple ones in here would be really nice, going into the New York Open. All right. Yeah, Zach here writes, we can never take every trade, only sniper trade, one shot, one kill. That's perfect. It's exactly what it's about. So here on this day, we are on December the 6th. Let's see what's happening right before. Okay. So as I'm seeing here, I'm seeing price, I'm seeing my EMAs going downstream right here. So this is a perfect slingshot. This is what I was talking about with these slingshots right here. Look how these EMAs pull back. It's like the rubber band. You get your signal, that's the trigger, releases price, and price just takes off. Here it's happening again. Okay. So this is a really nice one because you got the VWAP up here and you've got the tightening of the EMAs, and takes right off. Okay. And then what happens next? See, this is a nice pattern that you'll see time and again, as the EMAs cascade, as the river flows, however you can remember this. I like to use the river. Price is going to pull back, and then you're going to get that golden trade, and then it's going to go right down. Okay. That is like really nice trade. So what do I see in this trade? I see another beautiful H pattern divergence, okay, which is right here. Makes that nice H pattern. It's an H pattern bullish divergence here. And then against my oscillators, once, if this is a style that you like to trade, once you pick up on these patterns, you can never unsee them. I mean, your eyes are trained. It's like driving a car for the first time. You get a little rusty in the beginning, and then what happens? You learn how to make that right turn or how much of a right turn you need for your car to turn right. You get used to your brakes, how how much you have to press down for the car to brake. Same thing with trading. Once you're familiar with how price moves and you have all your confluences in place, then it just makes things a little bit easier. Okay. So because this is a nice divergence and it's probably into a zone in here, let me say, yeah, this probably triggered, even from this wick coming up. And that's all it needs too sometimes. It just triggers that wick. And if you look at it, if you look at my crosshair from the top of this wick, look at that. The wick over here to where that divergence is, it's touching right on that crosshair, right over here. So it was like perfect. So that's all it took for this to make a nice reversal. So this is what I'm saying. Always look left. Looking left is going to give you clues on how to trade right. So learn how to do that. And here we're right at a level So I'm going to take this, and actually this just like takes right off. So this is beautiful. And then you can see how the EMA is, how the river is coming down, and then it swooshes, goes right up. So, and then here's a nice transition. And then finally you have, red, orange, and teal, you know, and it's going up. So unfortunately, I wish the golden signal would have been down here, but VWAP is above the EMAs, so it triggered it right here because the pullback was deep enough to trigger the golden signal, and you can see it here going underneath the EMA, and that's why it's triggered. But I wouldn't take this, okay? Reason being is that I already have a pre-marked zone right here. So if I zoom way to the left, look what's happening right here. I've got a good resistance level right here. Okay. So as price is moving up, okay, there's a high probability that it can stop right here and reverse right down. And this is exactly what it did. So, and once again, we're at the New York Open. So I'm going to look for divergence, and I see it right here. Okay. And this is even a double confirmation. So I have a double confirmation, and I get my signal right here, and I'm going to take this down. Okay. So, and then what happens here? Price comes down to this other level that we had marked. So this has become a nice key level right here. Okay, it shot back up, and this is where the EMAs are in that transitional phase, and it goes from, up to down, red, orange, and teal. And this is where you're going to get that nice golden signal. Let me zoom in right here. I want you guys to see something. So it triggered on this candle right where it split. This red and orange literally split. So now it's independent. It's red, orange, and teal with the VWAP right above. And you can come down and make some points to the next level. So this is a really nice trade. Okay. So if this is my one trade, this could be my second trade, and you're done for the day. Even though there's some really good looking trades here, if I'm happy with how much I made right here, don't risk it. It's not worth it. Okay. You're going to do the same thing tomorrow. You're just going to wait for your A plus trade setup. Okay. This turned out to be a great day to trade, but we don't know that. All you know is that you're following some parameters right here that is going to give you a high probability A plus trades. You don't know what's going to happen past these shaded areas, you know. And it turns out that this thing was just going downhill like all day. So, which is good. If you're an afternoon trader, this could have worked out really well for you too. But we're happy, I'm happy on what I did over here. And if I took a trade here. So, um, let's see, right now we're going into an hour. Okay. Let's take a look at this last one, and then we'll do some questions. So I hope this session just really put you a little bit more at ease on how these EMAs work, how I use the EMAs at least, and how I use these golden signals and the slingshot, with my oscillators down below. So right here, let's see what's happening. Okay, I can really see the EMAs are going downstream right here. And I like this because even though, here, this is something that we haven't seen yet, even though the orange and the teal lines are intertwined right here, the red line, the red EMA is above. That's the strong line right here. Okay. This is a narrow, from a nice river, it turned into a little creek, back to a river. Okay. And this was a nice slingshot trade right here. Look at that. We got that sequence. I got my cloud, I got the VWAP, and I've got the red line up on top, and then, it got the trigger and it took off. So this is why it's important to mark your trades, to mark your zones. Look at this. Look at the left. If trade is coming down here, how do you know where to stop? I'm looking left. Look at that. Okay. This right here is turning out to be a nice key level, which if this were to stretch all the way to the right, price could stop at this level way to the right, somewhere. It could be 3 days from now, but you never know. So right in here, look at that. You have support, you got support, you got support, before, price takes off. Right in here. You got, a couple of good scalps. If you're getting too close to a zone, especially if you're like this, maybe you can kind of hold off on the trade. I'm on a 2-minute time frame. If you go to a 1-minute time frame, or if you have a premium plan, you can do like 30 seconds or even lower time frames. You could get a better entry for those type of um, entries, for it here, or in this case, we're getting close to the New York Open, and you really want to see what's going on. So even right here at the top, you know, you see the transitional stage right here where price is moving from short to long. I don't see a golden signal right in here, so I'm just going to hold off. Okay, I will see if I do spot a divergence because it's right at a key level here, because price is, price here stopped. So there's a high probability that price right here is going to stop. So I'm going to see if I spot a divergence, and I do see a nice bearish divergence right here. And I see it down here too, which is double confirmation. I'll wait for this signal and then I can take this trade. Okay. Now we're getting right before the New York Open. So I'm going to see, do I see another divergence in here, another divergence pattern that's going to want me to take this trade going up? I do see it right here. From here to here, and from here going down. Double confirmation. This is even better. Plus here, I'm seeing my slingshot pattern. Check that out. I mean, that's beautiful right here. I mean, look at that. The orange is kissing just right above the red. This really got in really tight. Slingshot, set the trigger, and price just took off on this day. You know, Even if this was your only trade, let's just say, it's in that dark shaded area and you went up this high, that's some pretty good money. You may not want to trade anything else after that, because this day right here, if I went up to here, let's just say, well, you can't see it there. Let me just open this up. Yeah, this is over 100 points. So this is 100 points is $2,000 right here. So this is over a $2,000 trade if you had a zone marked off up this way, or coming back down, then you get that nice pullback with the golden, and you could have gone up a little bit more if you wanted. But if you're going to do $2,000 just on that first leg right here, then maybe that's all you want to do. Okay. So once again, my golden signals are keeping me true within these time frame parameters, you know. Look what happens afterwards. This is like around the lunch hour. It's consolidating. The EMAs, everything is cutting right across price. That makes me uncomfortable. I don't feel like taking trades like this. Others like to do breakout trades. That's beautiful. Right in here, at the end of the day, the last hour, the EMA started to fan out and, price just took off just a little bit, not much, not as much as what you would see right here in the morning. So I think I'm going to end here with examples. I think I've shown quite a few examples on how I'm using EMAs and the golden signals along with my oscillators here. Okay. I want to kind of go over some questions and see what you guys have to say. So here, Nikki's saying, can I use regular candles instead of Heikin-Ashi? You could use regular, but I think these things were configured with Heikin-Ashi. So that's something that you would need to back test. And you could do a split screen and do a comparison on how signals will look like with regular signals versus Heikin-Ashi signals. I know for a fact that sometimes if you use um, the standard candles, I meant to say candles, not signals, um, the standard candles versus Heikin-Ashi, that you will get a divergence on Heikin-Ashi candle, maybe at a certain area, but you may not get it if you're using the traditional and vice versa. So that's something that you need to decide on what you want to do. So you got to back test all that. Okay. Let's see here. Okay, yeah, Michael came in a little bit late. Yeah, I was explaining some of these differences. So you'll have to watch the recording for the beginning. Okay. Somebody here's asking how long do you hold your trade? I explained that earlier. I like to use market structure, like right here, if this is making this really nice peak, you can go across, and if you're moving up this way, you can stop your trade right at that zone. So, or if you have a set risk to reward, follow your trading plan, and you can manage your exit strategy that way. Okay, let's see here. There's a nice comment Zach wrote for me is once you have profit to one or two good trades, shut down the PC. Because I know once your phone has the alert, you want to open it and take take another trade and you give up your profit. So another thing that you can do is you can go to the your settings, and if you wanted, right in here, the chart settings, you can turn off your buy and sell signal if you just want to view your chart. This way they don't appear on the upper left-hand corner. Plus I like to turn them off at the end because it gives me more space and it's not distracting if I'm, just practicing or looking at stuff. So that's something else that you guys can do. All right. Zach's converting, trying to convert people to futures, send him a DM. Okay. Let's see here. Nikki's asking, do you always use 2-minute time frame? I don't always use a 2-minute time frame. Sometimes I go to 1 minute, sometimes, 4 or 5 minutes. I guess it just kind of depends on how the setup is looking. If I'm kind of seeing maybe something not looking right, I'll drop down to a lower time frame. I'll drop down to a 1-minute time frame just to kind of see what some of these signals might tell me, or I want to see how the EMAs look like on a higher time frame. Okay, because once you do that, there is a difference on, even making decisions too. So it's we'll do some more of these, and then we'll do another review with split screens and kind of show you some things, that way. So, all right, Zach says you saw the H divergence. There is a TO is bull divergence, and Imbus is a bear divergence. Oh man, I forgot where that was. So you may want to send me a chart on that. Sorry, Zach. So couldn't really I missed that when I was drawing that. So let me know. Sometimes these divergences can piggyback. So for instance, here, right here in front of me, you know, this is what I call a piggyback divergence. Now, obviously, there's an order to these things. Just because I have a line on the bottom and a line on the top, all of a sudden people who are looking at this chart are like, well, which one do you do first? Well, price is going to move like this. Price is going to move this way. So the down is going to be your first trade, okay, going down. And then you have your continuation bullish divergence, which then price is going to go that way. So that is, I don't know if that would answer your question, so let me see. Oh, here, Zach posted a chart. Let's see. Oh yeah, right here. So his question was, you saw the H divergence right here. There is a TO is a bull divergence, and Imbus is, yeah. Well, okay. So here, this is what I was talking about earlier. I don't need both of these oscillators to show me the same divergence. As long as one of them is showing the divergence, that's good. This is why I use both of these things. Now, in this case, price is going down on the ultimate oscillator. Price is making a higher high. That's the divergence right here. On the TSI, it's making a lower low, just like how price is. So this would be the void. But since this is giving me the divergence, that's good enough for me to take on that divergence trade. So, but if it's showing it on both, that's why I was saying earlier, that's also, double confirmation, which is great, but you don't need to have both of them. So I hope that answers that question right there. Cool. All right, folks. I think this will end the session. I will, take care of this recording for you, pass it along. I think Garrett may want to put it up on YouTube, or wherever he feels it's fit. And, if you have questions or anything like that, let me know. But, once again, I hope the session just really explained a few things, how I use the trades. Maybe this will prompt you guys to come up with some other ideas. I'd really like to see that. I would really like to see, what other strategies somebody else can come up. If it's good enough, hey, maybe we can make a strategy out of it, somewhere down the line. So that's always great. So we'll see you guys on the charts. I hope everybody has a nice rest of the week, and we will talk to you guys later. Take care.